Hey guys, good morning and welcome to the Camp Financial Weekend Update, June 26th and 27th, 2016, or 25th and 26th, following the Brexit vote on Friday and the stock market hammering of Friday. So obviously, I've already kind of talked about that at length. And try not to bore people and go a little bit different path this morning. So I'm going to try to keep this very short. I was looking at a little article, or I guess it's a question, but so if you invest $250 a month for 35 years with an 8% compound annual return, you're roughly going to be looking at having $575,000 in a retirement account, or whatever account, if it's at 8%. So over that span, you'll have put in $105,000 of it. So you're going to have almost about 5.5 times the money that you invested, based off of compounding and an 8% annual return. And 8% is definitely doable as long as you pick the right investments and just let it run until it's no longer a good investment, until it's a company that you don't want to be invested in. So I want to start that off, in that manner, because I know a lot of people are still panicking over the Brexit vote and what happened in the market on Friday. But if you stay the course, you be smart, you know how much, over the long run, you're not going to have a lot to worry about. And I know I've talked about my 3 investing systems. I guess I wanted to talk about them today just so that so people can see that I guess I use 3 systems for one reason, and that's because each system is designed to perform well in different scenarios. So the one system I'm using, even after the Brexit smash and it lost, I don't remember how much it lost on Friday, to be honest with you. I had it on here yesterday, and I guess you could probably look at my post from yesterday, or from the 24th update, and it'll be on there. But so this system is down 1.07% on the month, and versus the S&P 500 that's down 2.84% for the month. And over the span of 2016 so far, this system is up 8% versus the S&P that's down 0.3%. So moral of the story, or long story short, you can beat the market. You just have to understand what you're buying and why you're buying it. And that's a very diversified system for sure. It's been around for a long time. I've been using that since 2010. So there's not, it doesn't have the bias that my 3rd system that I talk about coming up here does. So now looking at my 2nd system, it is actually up 0.31% for the month of June, and I guess it only has 8 stocks in it. So let me go ahead and I'll drill into the ones that are ahead, I guess. So Blue Cap Reinsurance Holdings, I own 22 shares of that. It really doesn't move. It's a very stable company. I've been in it since early 2015, and just been collecting the dividends. The other ones that are up in the month of June is Surgical Care Alliance. Ticker is SCAI. So it is, it's up 50 cents, 60 cents, something like that. Again, more of a longer term hold with the potential, for growth within their company, and expectations that over the long run it'll go higher. And then the third stock in there is up. So 3 of the 5 are up. The others obviously are all down. And the other one that's up is Agnico Eagle Mines. Ticker symbol is AEM. And it's up from it closed at $45 a share basically at the end of May. It's paid another dividend. I reinvested the dividend. So got another fractional shares, and right now it's trading at $52.03 is where it closed on Friday. So that gives you a bit of an idea of how you can diversify away some of the pain in the markets. Sorry, my dog is drinking water right there, and I'm sure that the audio is coming through like crazy, and so I had to shut that door and scared her a little bit, but she's good. So anyway, so this system, so I talked about where it's at on the month. It's up 0.3% versus the S&P at minus 2.84. And the system for the year is up 4.15% versus the S&P that is down, about 0.3 point. And now we'll go to my last system, the newest system, that's based on basically strictly fundamental analysis of certain companies. And it had been performing pretty well until Unum Healthcare got smacked by the Brexit vote, and Sunoco got hit pretty hard by the Brexit vote as well. Or actually, Sunoco was already down for the month, but the Unum vote was the one that got crushed on Saturday or on Friday. Anyway, so taking a look at this system, it is down 4.16% for the month. Excuse me, sorry. The S&P obviously is down 2.84%. This system I didn't start it until April 20th of 2016. So the total on it right now, it's down 4.3% versus the S&P that's down 3.1% over that span of time. So, I've tested this. I know the system will work over the long run. It's just a matter of letting it play out, letting it do its thing, and let it bounce back. So let me end with, again, right? So don't panic. Obviously, I mentioned earlier that if you for 35 years, $250 a month, you're going to have almost $600,000 at 8%. So play the long term and don't worry about the short term gyrations unless you're in something that is going to continue to feel pain from the uncertainty. Then that may be something you want to get out of and look for something a little less risky. So with that said, thank you for watching, listening, and if you have any questions, feel free to send me an email Chris M at campfinancial.net, and we can go from there. Otherwise, you can leave comments down in the section here on YouTube or on Facebook, or you can find me on Twitter at CMelik. And thanks for listening again. Take care.